Hey there, welcome back to our channel on financial fitness for beginners. Today, we're going to talk about an important aspect of personal finance, understanding credit scores and reports. It may seem intimidating or confusing, but don't worry, we're here to break it down for you in simple terms. So, grab a pen and paper, and let's get started. Credit scores and reports play a critical role in your financial life. They're used by lenders, credit card companies, and other financial institutions to determine your creditworthiness. In other words, they evaluate how likely you are to pay back a loan or credit card debt on time. A good credit score can help you qualify for better interest rates, lower fees, and higher credit limits, while a poor score can result in higher interest rates and less favorable terms. So, what exactly is a credit score? A credit score is a three-digit number that ranges from 300 to 850. The higher the score, the better your creditworthiness is. Credit scores are calculated based on several factors, including your payment history, credit utilization, length of credit history, types of credit, and new credit. Your credit report is a detailed summary of your credit history. It includes information about your current and past credit accounts, such as credit cards, loans, and mortgages, as well as any later missed payments, bankruptcies, and collections. It's important to review your credit report regularly to ensure that all the information is accurate and up to date. Errors on your credit report can negatively impact your credit score and affect your ability to get approved for credit. Now that we've covered the basics of credit scores and reports, let's talk about some tips to help you maintain a good credit score. 1. Pay your bills on time. Payment history is the most significant factor in determining your credit score. Later missed payments can have a negative impact on your score, so be sure to pay your bills on time. 2. Keep your credit utilization low. Credit utilization is the amount of credit you're using compared to your credit limit. Ideally, you should aim to keep your utilization below 30%. 3. Limit new credit applications. Applying for too much credit in a short period can lower your score. Be selective about the credit you apply for and avoid opening too many accounts at once. 4. Monitor your credit report. Review your credit report regularly to ensure that all the information is accurate and up to date. If you notice any errors or discrepancies, take steps to correct them. So, there you have it, a basic understanding of credit scores and reports. Remember, maintaining a good credit score takes time and effort, but it's worth it in the long run. By following these tips, you can improve your creditworthiness and achieve your financial goals. Thanks for tuning in, and don't forget to subscribe to the channel, comment your feedback, and like this video. See you in the next one.